Turtle soup is one of the most underrated ICT concepts, and if you can combine turtle soup with average true range, it can result in a deadly trading strategy. So in today's video, we will be covering what is turtle soup, what are high value areas including weekly highs and weekly lows, Monday highs and Monday lows, structural highs and structural lows, equal highs and equal lows. Thirdly, we will be covering high probability way of trading turtle soups, and lastly, we will be seeing how to place stop losses using average true range, Fib extensions and manual stops. So let's get started. So first of all, let's study what is a turtle soup. Turtle soup is basically a complex word given to liquidity sweeps and swing failure patterns. In these type of scenarios, retail stops are taken from high value areas. We will discuss some of the high value areas in this video. What happens is that the retail stops are taken from the high value areas and price fails to displace through the high value area. So we get a turtle soup pattern. Now let's look at the bullish turtle soup pattern and a bearish turtle soup pattern. In a bearish turtle soup pattern, price takes out these retail stops and then closes back inside to give us a short trade. We would short here, placing a stop above the high and targeting these lows. However, it is important to note that the turtle soup patterns are a high win rate pattern when they happen at the high value area. We will be seeing what are high value areas just in a minute. So now let's see what is a bullish turtle soup. In a bullish turtle soup pattern, price regularly taps the high value area, then takes out these stops of the retail. These stops of the retail were taken out by this purge or turtle soup or liquidity sweep, and price closed back above. So price took out the retail stops here with this green line and then closed back above this high value area. This indicated us that price failed to displace through this high value area and also took these retail stops. So this would be a potential long here, with the entry here and a stop loss down below and targeting above highs. So now let's see what are high value areas. High value areas are basically some specific higher time frame PD arrays that give a higher win rate with turtle soup patterns. So there are basically 4 high value areas that I have identified. First of all, we have the weekly highs and the weekly lows. Second, we have the Monday highs and the Monday lows. A thing to remember here is that the Monday highs and Monday lows is a low probability setup, and I usually take it with half size risk. Thirdly, we have the structural highs and the structural low and equal highs and equal lows. While considering the high value areas such as structural highs and structural lows, I like to keep my time frame above or at least 4 hours. So now let's look at each example of the high value area on the chart. Now this is a Euro USD 4-hour chart. You can see this was our previous week high. Now price came, took this high and close back inside. Basically, it failed to displace. It took out these retail stops as the turtle soup defines. It took out the retail stops, then failed to displace as it came back inside this previous week high. So we could have shorted some euro here with a stop loss above this high and targeted these lows. Also, an important thing to remember here is that I will teach you a specific method of how to place stop losses while taking setups for turtle soup. So don't worry and do watch till the end, because in the end I have a specific method on how to place stop losses while taking turtle soup setups. So now let's come on to the lower time frame of this same chart. You can see price took out the weekly high here. This was the previous week high. Retail stops were resting here. Price took out the high and then closed back inside, or you can say failed to displace. So this is a basic turtle soup pattern. And which kind of a turtle soup is this? It is a bearish turtle soup as studied above. What did price do? Price came, took the retail stops that were on the previous week high and then failed to displace as it closed back inside the previous week high. So we could have placed a short trade here, and I will teach you how to place stop losses later in the video. So let's move to our next value area, that is the Monday high and the Monday low. This is a Euro USD 1-hour chart, and this orange line is the Monday high. You can see price came and took these stop losses. This was the stop losses of the retail traders and closed back inside the range. You can see price closed back inside the range here, or you can more appropriately say failed to displace through this Monday high. So we could have placed a short trade here with a stop loss above the highs and targeting at least this sell side liquidity. So I hope this was also clear. Now let's move on to the lower time frame of this same pattern. As you can see here, price took the Monday high. This is a lower time frame version of the above version. This is a 1 hour chart of Euro USD and this is a 30-minute chart. So price came and took the Monday high. This was the Monday high, as I also told you in the previous chart. Monday high. Price came and took this high and closed back inside, or you can say failed to displace. So you could take a short trade here. So I hope the two value areas that we have studied up till now are clear. First value area was weekly highs and weekly lows. Second value area was Monday highs and Monday lows. So I hope all of this is clear. Now let's move on to a third value area, which is structural highs and structural lows. Now this is a 4-hour chart on the dollar index. You can see this is a structural 4-hour high. This is a structural 4-hour low. Price came and took the retail stop losses that were present here. You can see these wicks all took out the retail stop losses that were present here, and price then failed to close above it. You can see price didn't close above this structural high. No candle closes were above here. So what does this mean? This means that price is showing weakness, and this is a bearish turtle soup pattern. So we can place a short here and target the lows. These lows, all these lows should be targeted. This is a lower time frame version of the above chart. As you can see on the 30-minute, this was a structural high on the 4-hour. This was a structural low on the 4-hour. Price came and took out these stop losses that the retail placed here. All these wicks were stop hunts. And then what happened? After taking these stop losses, price reversed to the downside and took out these lows. So I hope this was also clear. Up till now we have studied what is a turtle soup. We have then studied what are the value areas from which we can take a turtle soup pattern. Now we will study what is the high probability way and what is my setup of taking a turtle soup pattern. The 3 steps which I look for before taking a turtle soup pattern are: firstly, identify the higher time frame trend. Nothing goes in the trading charts without identifying the higher time frame trend. First of all, identify the higher time frame trend and make sure that you align your bias with that. If the higher time frame is bearish, align your bias as bearish. Secondly, wait for a red folder news and take out the retail stops either at the highs or low of the high value area. So basically the second step tells you to wait for a red folder news and wait for the retail stops to be taken out on the high value area. Now the third step is to take a trade if price fails to displace and place a stop loss according to average true range. Now this technique of placing a stop loss according to average true range, I learned it from Trader Dante and slightly modified it, but the main credits go to Trader Dante as he taught me this. So let's see an example of this. This is a gold chart on the daily time frame. What is the bias according to you guys? The chart is trending downward, so obviously the bias for us would be bearish. So the first step is done. Now we have to identify the high value areas on the lower time frame such as the 4-hour and wait for a red folder news to take out the retail stops. So let's move forward. Here you can see I have identified the structural highs. Retail stops are placed here, everywhere, and these are the structural lows. Now I waited for a red folder news. As you can see on this red folder news, price took out all these retail stops. And as you can see, there was no candle closure above this structural high level. So what does this mean? This means that price is showing weakness, and this is a bearish turtle soup pattern. So you can easily take a short trade here. Up till now, it must be clear to you how to take a trade when the retail stops are taken and you see a turtle soup pattern. Now we come to the most important topic as to when you will take a trade here. How will you place a stop loss? So let's see some methods of placing a stop loss. There are basically 3 methods of how you can place a stop loss after taking a turtle soup trade. Firstly, we can place a stop loss using the average true range. So let's move on to the trading view so I can explain you better. Now to access the average true range, you can just go in the indicators tab and type average true range. Average true range basically gives you an average number of how much the last 14 candles have moved. Now let's suppose these are two candles on the gold chart. I am doing this to better explain you how a ATR works. So let's suppose this candle had a high of 11 and a low of 8. This candle had a high of 12 and a low of 7. So what is the movement between 8 and 11? 3. And what is the movement between 7 and 12? 5. So what does ATR do is that it takes the difference that is between 11 and 8 and 12 and 7, that is between the highs and lows of the last 14 candles, and averages it out. Like it would take it for 14 candles and then divide it by 14 to give you an average number of how much a candle will move. So I hope the ATR concept is clear. Now let's move on to the charts again. So here you can see we have this red line which gives us a number as to how much the last 14 candles have moved. But I don't like to use it in this way. The way I use it is I zoom out a bit and try to mark SRs on this ATR. Let's suppose what is the most common SR you are seeing here. This one and this one. So I will like to take the values from this SR and place a stop loss of 1 SR or 1 ATR of this value. Okay, so what I did was I took the ATR indicator, placed it here, zoomed out a bit and marked the most obvious SRs, which were this line, this first orange line and second line. Now the values of these SRs will tell me how much on average a candle on 4 hour can move. So here I have one value as around 12 and one value as around 13.5. So the first SR has a value of 12, which means that a candle according to this SR will move 12 points, and the second SR has a value of 13.5, which means that a candle on the 4 hour will move around 13.5 points. So now how will I place a stop loss? Now once I know that a candle can move a maximum of 13.5 points, what I will do is I will take a short trade once it has taken out the stop losses here, and will place a stop loss 13.5 points above this level. I will place a stop loss 13.5 points above this level. So what would it be? So our orange level has a value of 1985 and our maximum ATR is 13.5. So if we plus these both, we will get a stop loss value that will be equal to 998.5. So I have placed the stop loss there, and I will like to target what? I will like to target at least these lows. So it is a 3 to 4 hour trade. Let's run it forward, and if I could place this position correctly, let's run it forward. As you can see, we targeted the lows and I took profit here, and the 4 hour trade was completed. I showed you how to place a stop loss with ATR, how to take a trade with turtle soup, and I hope the concepts were clear. Now we will look how to place stop losses if we are not using ATR. So the second method of placing stop losses is by using Fib extensions. So you will go on to the lower time frame such as the 30 minutes and mark a Fib extension on the lower time frame leg. So let me explain it better on the charts. Now this is the exact same gold setup. Now we will go on to the lower time frame such as the 30 minute and mark the Fib extension and try to place a stop loss. So if you can see on the 30 minute time frame, the low of this leg on the lower time frame is this, and the high is this. So I will take the Fib extension from here. This is the Fib tool. You can see my settings as well in a minute. I will place the first point on the low, the second point on the high, and I will extend this Fib extension towards here, like eyeballing it towards here. So now the precaution and the back testing result that I have seen is that if a trade is to give you a turtle soup setup, the price must not go above this 0.5 level, minus 0.5 level. If the price is to give you a turtle soup setup, then it must not go above this minus 0.5 level. And how did I mark this Fib extension? Let's see it again. I will delete this Fib extension, and how will I mark it? I will take the fib extension, place my first point on the low, second point on the high, and extend it sideways. So my price should not exceed this minus 0.5 level. Also, I can show you the settings of the fib chart, so you can copy it and place it in your own trading view. So these are my settings. You can do it up to yourself. I like to place the 0.79 level because this is an OTE level, optimum traded entry, and the price must not go above minus 0.5 level if it is to give you a turtle soup trade. So now let's move on to the third method as to how to place stop losses while taking a turtle soup trade. So the third method is pretty easy. You go to your desired commodity or forex chart or anything and see how many times this turtle soup set up as occurred, and calculate this deviation, or you can say swing point or liquidity sweep. Calculate how many times this liquidity sweep has happened, and also calculate of how many pips it has happened. Suppose one time it happened of 20 pips, second time it happened of 10 pips. Likewise, back tested for 1 year. Back tested how much deviation did happen on every turtle soup pattern, and then take an average of it. So you will have a manual stop loss by taking the average values of every turtle soup pattern that has happened on your commodity or your forex pair.